Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today, we're diving into a report from Greenlane Holdings, and let me tell you, it's not exactly a pot of gold at the end of the rainbow. In fact, it's more like a notice that they might be getting kicked off the Nasdaq. Greenlane Holdings just filed a Form 8K, which is basically a quick update companies send to the Securities and Exchange Commission, or SEC, about major events. This one's all about a warning they got from Nasdaq. The problem is that Greenlane's stock price has been below $1 for too long. Nasdaq has a rule that if a company's stock stays below that dollar mark for too long, they could get delisted, meaning their stock would no longer be traded on the Nasdaq exchange. The notice from Nasdaq said that Greenlane hasn't been following Rule 5555.22, which has to do with keeping their stock price above $1. Usually companies get some time to fix this, but in Greenlane's case, they don't get that break because they did a reverse stock split in the past year. They're not eligible for the extra time. A reverse stock split is when a company reduces the number of its outstanding shares, which increases the price of each share. The problem with Greenlane is that doing that didn't help them for long, and they're still below $1. So if Greenlane doesn't do something quick, Nasdaq says they're going to stop trading their stock starting April 11, 2025. They will also file what is called a Form 25 NSE with the SEC to remove the company's stock from listing. Greenlane says they're going to fight this by appealing the decision, basically asking Nasdaq to reconsider. If they appeal by April 9, 2025, the delisting will be paused while Nasdaq looks at their case. But there's no guarantee they'll win the appeal, and their stock might still get delisted. Now, here is a little warning from the company. They use the term forward-looking statements, which are basically guesses about what might happen in the future. Greenlane says that these guesses might not be right because things can change, and they're not promising anything. They are saying things like intends, believes, and other similar words that show that they are not certain. Now it comes the time to look at the financials. This part is quite short because it's only the cover page interactive data file. Tapping now, let's step back and take a broader look at Greenlane. Greenlane's current situation is precarious. The delisting notice is a serious blow, and their appeal is a high-stakes gamble. If they fail to convince Nasdaq to give them another chance, their stock will be delisted, which can make it harder for them to raise money and could scare away investors. While Greenlane is trying to get more time to fix the problem with its stock price, the company could also explore strategic alternatives like merging with another company or selling off some of its assets. This kind of move would help boost its financial position and avoid being removed from Nasdaq. But with this filing, the company needs to act fast and find a way to get back on track. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit the like button, leave a comment, and subscribe for more corporate deep dives.